What is going on, Future Focus family? My name is George. Welcome to Future Focus Finance, where we try to give you all the news on what's moving in markets. We talk about stocks, we talk about cryptocurrency, we talk about housing, we talk about anything that has to do with finance that could potentially help you make your money grow. Because ultimately, that's our main goal, trying to teach you everything we know and learn as well from you guys, the viewer. So we appreciate all you. If you're into this kind of content, please consider subscribing. Drop a like if you like what we talk about today. Today, we're going to talk about a lot. We're going to talk about some updated news in the crypto market, some updated news in the stock market, and we're going to look at a few charts from a few companies and one cryptocurrency. So stay tuned for that. Before we get into all of that, the S&P 500 is currently up 1.1%. The Dow is currently up 0.64. The NASDAQ is up 1.90%. The Russell 2000 is up 1.18%. Crude oil is still sitting above 100, but it's currently down 1.24%. Gold is down to $1,916, but it's still above that $1,800 range that we talked about previously. Silver is down 1.85%. And we have, let's talk about Bitcoin. Bitcoin is currently up 4.28%. It hit above that $43,000 mark earlier, but it's currently sitting below that. The crypto index as a whole, CMC crypto, is up, but only 0.80%. So with all that said, let's get right into this news. So the first thing we're going to talk about is some of the biggest news that's been going on. So what we got here, January's huge market correction was just the beginning of a lost decade in stocks. Stifel's chief equity strategist says. So stocks experienced a brutal correction in January before bouncing to end the month down roughly 5%. That may be just the start of the pain for passive buy and hold investors, according to Barry Bannister, the chief equity strategist at Stifel. In fact, the strategist is predicting an entire decade of suffering ahead for markets as the Fed raises interest rates. Buy and hold is the ideal strategy in the bull phases, but in the down phases, being in the index is not going to generate a positive turn. So keep that in mind. Passive investors who often choose to hold indexes like the S&P 500, which tracks the 500 largest companies traded in the U.S. exchanges, saw a compound annual rate of return of more than 13% over the past decade, but the market hasn't always been so kind to its most patient players. Historically, 20-year total stock market returns have always been positive, but there have been multiple decade-long periods when passive investors have long lost money. He argues that the past decade of passive management, and he's talking about the decade between 2010, which preceded the big was directly after the great financial crisis, to 2020. As long as the laws of supply and demand exist, we're going to have supply chain disruptions, geopolitical rivalries, fiat currencies, indebted governments, populism and profit margin, and regulatory pressure. Not his first luck. This is not the first time he's predicted a lost decade. So let's analyze this. Um, I want to know what your thoughts are on this. Do you think we're going to have a lost decade in the stock market? If you do, let us know in the comments below how you're going to play that. I can tell you right now, a lot of it depends on your time horizon. Are you investing for less than 10 years? If not, then it doesn't really apply to you because you want to pray for a down decade, especially if you're investing in say you're looking out 15 years, 20-year time horizon. If you're still in your 20s and you want to retire when you're 40, or if you're in your 30s and you want to retire when you're 50, maybe we have some later viewers that started investing when they were 40 and you want to retire when you're 60. Like, you're looking at 20-year time horizon to invest. So are you really concerned about what's going to happen in the next 10 years? I'm personally not, because I have a long-term time horizon. So I pray for down days. I pray for a crash. I pray for a lot of these things to happen. I don't literally pray for it, but it's just a figure of speech. But I do hope things like that happen, because I look at it as I'm still getting things for cheaper on the low for a longer period of time. Obviously, I don't have all the money now that I'm going to accumulate over the next 10 years from wherever I work, or any passive income I get from my houses or anywhere else. So I don't have all the money now to put into a stock or a cryptocurrency. that I could just sit and hope that it blows up fast. I want it to gradually happen and happen slowly because I don't plan on cashing out. I don't anything that I invest or put into the market, I don't expect the return on it right away because I don't need it. I don't invest like that. And I would recommend that you do the same thing. Strategy that I do use is that anything in my stock portfolio, crypto portfolio, or any money that I use to invest, 30% of that is always sitting in cash. Whenever there is a huge opportunity, I don't have to worry about going and selling stocks or crypto in order to buy another stock or crypto because it's gone up so much and I see a great opportunity. I don't have to go and get those capital gains taxed right now. I could just use the money that I have on the sidelines in order to jump in. If nothing really appeals to me, if nothing happens, then I don't invest at that moment. I hope that makes sense, but I do want to know what you guys think and how you guys invest. So let us know in the comments below because we can learn from each other. Maybe you have a strategy that's better and I could apply it myself. I could try it out. But the next thing we're going to talk about is the only green sector in the stock market year to date. So energy stocks are leading the pack in the stock market in 2022. So since January 1st till now, this is the only index, the only part of the S&P 500 that is currently up. So energy stocks are up. Energy is the only sector to be green, and it's currently up 37%. The benchmark itself, which is the S&P 500 as a whole, is still down 6.4%, with investors worried about the pace of the Federal Reserve's plans to increase the interest rates to curb inflation. One of the 25 best performing stocks in the index this year, 18 of them sit in the energy sector. You have Occidental Petroleum, which has more than doubled. You have Halliburton, which has surged 64%, and Chevron, which is up 40%. So let's step away from that as well, and let's talk about it. Unfortunately, if you thought about this being a great idea, the time has passed. This is not a moment when you want to jump in to a sector that's already up. Am I saying that fuel, which is currently, like we talked about, at 110 a barrel, you want to jump in now when it's currently at 110 a barrel? No, right now is not the time that you want to jump into that. All right. So what you want to do is you want to look for an opportunity that hasn't yet blown up and has not yet been elevated to a point where you jumped in. Right now, if you were to jump into one of these sectors, it would not be a good time for you because, again, it already has run its course. I'm sorry, you missed it. And it's all right. We miss things sometimes. Don't fret. It's good. If you put that money in now, the risk versus the reward of what your money can do is very minimal. Some speculate that fuel per barrel can go up to 130. So if you are invested in, let's say, Halliburton or Exxon or one of these petroleum companies, then you're going to put money at risk. So hopefully it goes up to 130, which is the cap that they're seeing. So is it really worth it? You have others on the other side of the aisle that are thinking that it could go back down to $70 a barrel as soon as this summer, especially if governments start intervening and there's more intervention, especially if Iran starts releasing more fuel. This would release some of the burden on the prices, and thus the price per barrel would drop. And then you would end up hurting yourself trying to make a trade like that. This trade should have been made as soon as you heard the announcement, or you should have been out of it a while ago. So unfortunately, this is not the time to jump into one of those. All right, so let's move on. Next, we're going to talk about Goldman Sachs. All right, we're going to get into some crypto news now. So over the counter, the OTC trade, which refers to the private dealing between two parties without a middleman, is a significant step in the development of cryptocurrency trading. Major Wall Street firms have been hesitant to fully embrace crypto, but Goldman's trade with Galaxy Digital may signal maturation of the digital asset. So Damian Vanderwilt, co-president and head of global markets at Galaxy Digital, said the transaction is expected to, quote, open the door for other banks considering over-the-counter as a conduit for trading digital assets. So Goldman is continuing to trust in us as a testament to Galaxy's expertise and ability to meet the evolving demands by institutions as crypto solidifies itself as the fifth asset class, he said. Max Minton, Asia Pacific head of digital assets for Goldman, said the transaction was an important development in the bank's digital asset capabilities and for the broader evolution of the asset class. And why is this a big deal? It's a big deal because Goldman Sachs is the first major bank on Wall Street to do something like this. So we are seeing a lot of demand for more derivative type hedging. The next big step that we are envisioning is the development of options markets. So, in other words, there could be options markets that are made for cryptocurrency. That way, people who are traders and speculators on these stocks have a way to, an ability to trade. What will this do? It will add more money into the crypto market because more people have a way to play it. So, that's always a positive. A UK watchdog puts 50 crypto companies on notice. So here's some bearish news. All right. So the UK Advertising Standards Authority has told more than 50 crypto firms that they to review their ads and make sure they are compliant with the rules. So this is some news here. The ASA also threaten firms with targeted sanctions if problem ads persist. It had previously banned ads from the likes of Coinbase and Papa John's over concerns they misled customers. So what does this mean? It doesn't mean anything major. It's not really that bearish. It's just putting them on notice. Nobody's being fined. Nobody has been told. All it is in notice to the companies. The regulator gave guidance stating advertisers must make clear digital assets are unregulated in the UK. Firms must not urge people to buy Bitcoin or another cryptocurrency in their ads or create the FOMO, fear of missing out on an investment. The ASA didn't name the companies it has contacted, but it had previously banned ads from the likes of platforms Coinbase. This is a red alert priority issue for us, and we've recently banned several crypto ads. So ultimately, this is just a way for them to hedge. This is just a way for them to say, we are not going to allow you to manipulate our investors, which is actually positive. So as long as these companies abide by that, there's no bearish news here that I can see. All right. So next, we're going to talk about Ethereum. All right. The man behind Ethereum is worried about crypto's future. So Vitalik, if y'all know who he is, in a few minutes, electronic music will start pulsing, stuffed animals will be flung in the air, women will emerge spinning technicolor hula hoops, and mechanical bill will rev into action, bucking off one delighted rider after another. So he's talking more about the metaverse. But as the crowd pushes inside, a wiry man with elephant features is sprinting out of the venue, past astonished selfie takers and venture capitalists. Some call it imploring him to say, others even chase him down the street. So Vitalik Buterin is the most influential person in crypto, arguably. All right, because there's some that would speculate that maybe Elon Musk is because of the way he can move cryptocurrency, or some would say Charles Hoskinson from ADA is because of the way Cardano's their community has grown. So Vitalik Buterin, the most influential person in crypto, didn't come to Denver to party. He doesn't drink or particularly enjoy crowds. Not that there isn't plenty for the 28-year-old creator of Ethereum to celebrate. 9 years ago, he dreamed up Ethereum as a way to leverage the blockchain technology underlying Bitcoin for all sorts of uses beyond currency. So basically Web 3.0. Since then, it has emerged as the bedrock layer of what advocates say will be a new open source decentralized internet. Ether, the platform's native currency, has become the second biggest cryptocurrency behind Bitcoin, powering a $1 trillion ecosystem that rivals Visa in terms of the money it moves. Ethereum has brought thousands of unbanked people around the world into financial systems, allowed capital to flow unencumbered across borders, and provided the infrastructure for entrepreneurs to build all sorts. But what does this all mean? So let's continue on. Let's see what the news is about. But even as crypto has soared in value and volume, Buterin has watched the world he created evolve with a mixture of pride and dread. Ethereum has made a handful of white men unfathomably rich, pumped pollutants into the air, and emerged as a vehicle for tax evasion, money laundering, and mind-boggling scams. Some of these scams that he's talking about is kind of like phishing, like email phishing. It's the same thing. They'll have a coin. People will get motivated about the coin. They'll be in fact nothing else in there. It has no actual monetary value, but people got hyped about it, so they invested in it. And next thing you know, there was never any cryptocurrency there. This has happened a lot with celebrities that have been paid to advertise a certain cryptocurrency. They never did the research, and it turns out some of these cryptocurrencies didn't even exist. So some people ended up losing a lot of money there. So what is he worried about? He's worried about the dangers to overeager investors, the soaring transaction fees, and the shameless display of wealth that have come to dominate public perception of crypto. The peril is you have these 3 million monkeys and it becomes a different kind of gambling. He's talking about Bored Ape NFTs. He says, referring to the Yacht Club NFT collection of garish primate cartoons that has become a digital age status symbol for millionaires, including Jimmy Fallon and Paris Hilton, and which have traded more than 1 million a pop. There are definitely a lot of people out there that are just buying yachts and Lambos. So what he hopes is that Ethereum will become the launch pad for all sorts of socio-political experimentations, fair voting systems, urban planning, universal basic income, public works projects. Above all, he wants the platform to be a counterweight to authoritarian governments and to upend Silicon Valley's strange stranglehold over our digital lives. So, in other words, he just doesn't want this to get ahead of itself and end up being a negative instead of a net positive, which he foresees that the way we're going, it can be. He goes on to say that if we don't exercise our voice, the only thing that get built are the things that are immediately profitable. He says, reedy voice rising and falling as he fidgets his hands and sticks his toes between the cushions of a lumpy gray couch. And those are often far from what's actually the best for the world. So just keep that in mind. He sees a lot of people out there getting hurt. And when he thought about this whole thing, this is not what he envisioned. He did not envision a world where people were getting scammed and screwed over. And it's not what he wants for any cryptocurrency at all. The whole marketplace, NFTs, like there are a lot of positives that come with it, but he sees big money getting involved in and turning it into a net negative, and that's not what we want. So just be careful out there. There are scams. Whatever you're investing in, and whatever platform you're investing in, make sure that it is something. All right. There was a recent example was this coin called Angel Dusk that people Angel Dusk DUSK. People got all hyped about it. They started investing, all the money they had into it because they thought it would be like another Safe Moon, another Dogecoin. So they, pumped the stock up. Um, they got something put into their wallet, but it was not what they thought it was. So just keep that in mind. All right. They just have something sitting in their wallet now that says they have this currency, but there's no monetary value attached to it at all because all it is a piece of data that was placed in there and they can't sell it. They can't do anything with it. So just be careful for anything like that. All right. That's a warning you should definitely take heed to. So now we're going to take a look at a few charts. The first one we'll look at is one that I've been considering jumping in on, which is in the cryptocurrency market. A lot of people are afraid of this one. A lot of people are pessimistic, optimistic. So let's see what the technicals say about investing in it. And this is Coinbase. All right. So we'll take a step back. We'll look at the 1-year chart. I've taken the liberty of putting some short-term resistance and some different levels up here for you guys to analyze and try to take a gander at and see if this is a worthy investment. So taking a look back, let's go to the all-time chart for this stock. All right. So at one point, this stock hit an all-time high of $431. And currently the stock is sitting at $186.94. So keep that in mind. It's down about 70% still from the all-time high. As a stock, it traded sort of like a crypto because it is correlated with the crypto market. If there is a big crash in the crypto market, they will be directly affected by that, obviously, and thus their market cap is going to fall with the crypto market as a whole. All right. So looking at the 1-year chart, you could see we had a head and shoulders pattern here. We have the shoulder, we have the head, we have the shoulder. We've talked about that in previous episodes. Anytime you see a head and shoulders pattern, the ultimate trend will be reversed. So here we had kind of an uptrend. You see higher highs and higher lows. Ultimately, peaking right here at the $368 level. Once we hit that head, we hit the next shoulder, and then it was down from there. And that's at the 1 year mark. Year to date, so since January 1st, we've dropped down exponentially. On January 1st, we were sitting at the $257 level, and we can see what the market has done since then. We could have another head shoulder pattern building. If we kind of look at this here, we could have, one shoulder, the head, and another shoulder building up, but it doesn't necessarily have to play out that way. If it does, then this last few days can stick. But I want to see it close at least 5 days above this $186 level. If we could get to 195, that's the next level of resistance that I see. That will mean that this 186 level will become support. So that means that's the bounce, hopefully continue to bounce off of this and continue to stay above this 186 mark. If it can do that, then I'll be bullish and I'll start investing in this. But let's take a closer look. We could look at the 3-month chart. Nothing really major sticks out here. The 1-month chart, I took the liberty of analyzing and putting a line here. What I like to do is put a line here at the latest down mark. Try to draw a line in between, and anywhere where it's underneath this line, this diagonal line up here, I feel we're buying opportunities. So anything above that, they were not necessarily a sell opportunity, but not an area where I wanted to buy. And again, if we could continue the momentum of staying above this, I would not buy until I continued this line up and we fell underneath that trend line. So just something to look at there. I'm not investing right now. I want to see the next 5 days, analyze it. If I like what I see, and of course, I'm going to keep you guys updated. So, continue to watch throughout the days. We'll keep analyzing it and see where it goes from there. Another one I want to look at was nano dimensions. All right. So nano dimensions, let's get out of here. It closed out. Don't worry about it. We'll skip it. We're gonna go straight to ADA Cardano. If you've been in this channel for a while, you know that this is a channel favorite. We've been advertising this one since it was 4 cents. I've been investing it since it was 9 cents. At the 4 cents, I was still doing research, analyzing. So I didn't get it at the very bottom, but I made my first big purchase of it at 9 cents. I purchased again at 16 cents. And since then, I've been nothing but satisfied with the production of this because there is an underlying company that goes with it. There's a founder that's very committed to this and he's very in the project. All right. So here we go. I got a few levels of resistance here, a few levels of support. This is the 1 year look at it. If we look at the all-time chart, take a step back, you can see that the all-time high at one point was about $3.09. And we are currently still under $1. All right. So anywhere under $1.30, I believe, is an investable bottom. We bottomed out around the 70, what was it, 70, 75, 74 cent level. And since then, we've been on an uptrend. All right. So let's see what we've been out year to date. Since January 1st, you can see what the stock has done. Not stock, sorry, what the cryptocurrency has done. We had a level of consolidation period here, went up a little bit, consolidated here for a little bit. We went down again. We consolidated here for a little bit. And now the uptrend has lasted longer than any of these previous uptrends. All right. So that's one thing to keep a look at. Currently, we're at the 97 cent level. If we could close above the 97 cent level and again, I like looking at 5 consecutive days of closing above that level, then that'll be a great level of support. And I'll be willing to jump in on it again and invest some more. But anywhere under 130 is you're good in the long term, depending on your time horizon. All right. Here we got $1.14. That's another one. I could see a channel building between the dollar level and the $1.14. And that could be tradable. As you can see, that goes back here. We were in that channel for a while. And I could see it going back to that for a while. And it's just investors waiting to see what the next move is going to be. Maybe some good news happens and it could push it above the top, or some negative news happens and it could fall beneath those levels. But any dips, take advantage and make a purchase. Um, I bought down here during this consolidation phase between 74 cents and 80 cents. I made a few purchases there. So just keep a lookout, keep your mind in there. Um, this is another one that I look at. This is again Cardano, ADA USD. So ADA tethered to the US dollar. Um, and that's pretty much it on the charts. But again, there's a lot going on out there, a lot to stuff to consider. Right now is not a time to be buying. The market's been up the 6 out of the last 10 trading days. So right now is not a time for me to buy anything. All right. I'm just looking for again those 5-day trends. I'm looking forward I'm looking forward to next month as well, when the Fed comes out at their meeting and says, we're going to raise the Fed fund rate by 0.25 or 0.50. So that could have a big impact on all of this, all the stocks, all the crypto. So just keep that in mind. All right. Thank you. If you watched it this long, I hope you got something out of it. I hope it was educational. As always, invest in me and press that like button. Invest in yourself and smash that subscribe button. It costs you nothing to do that. All right.